So I'd like to introduce our panel today. We're joined by an excellent panel. Amelia Quist is Senior Policy Manager at the Federation of Small Businesses, and Jamie Jenkins is a long-time pensions industry expert. And finally, Jo Phillips is our Director of Research and Innovation at Nest Insight, and she, among other things, leads on our work on supporting the self-employed into retirement saving. And all three of Jamie, Jo and Amelia are also part of the DWP's working group exploring issues around the self-employed and pension saving. We're really grateful to the DWP who support this programme of research for Nest Insight. And I was going to say a little bit more about that programme and the context for what we're going to be talking about today before I hand over to Jo to talk through the findings of the research, and then we'll hear from Amelia and Jamie, their initial reactions to that, and we'll throw the session open to Q&A for the last part of the session. So the presentation Jo's going to give provides a summary of the findings of our research into the impacts of COVID-19 on self-employed people, which was conducted in September of 2020. And that research is part of a wider programme of research that's supported by DWP to explore and test different approaches to enable increased retirement and long-term saving among the self-employed in the UK. So it builds on previous parts of that research programme that we've published in the past around supporting self-employed people to save for retirement, which we published in October 2019, and talking with the self-employed about retirement saving, which we published in September of this year. The objective of this research is to understand the impact of the COVID-19 pandemic on the financial well-being of the self-employed in general, and about their long-term and retirement savings outlook specifically, both by comparison to the situation within the self-employed pre-COVID, but also those for more traditionally employed people today. Our hope is that by providing insight into the financial impact of the pandemic on the self-employed, we can understand the findings of our previous research in this new context, and think about how we can impact that into our future plans for research, in particular, as we've discussed before, around trying to test different technological interventions to helping the self-employed to save more for the long term and for their retirement. So with that context in mind, I'm going to hand over now to Jo, who's going to take us through the findings of the research. Thank you, Jo.
Thanks, Will. Can I have the next slide, please? So before getting to our learnings, I'll just share a brief overview of our approach. This research was conducted using an online survey amongst individuals who said that they consider themselves to be self-employed or employed, and it was conducted by the research agency Quadrangle. I'd like to thank them and the rest of the research team for all of the hard work that's gone into this. The survey was completed in September by just over 2,000 self-employed people and around 1,000 employed people. And we then weighted the data to a nationally representative profile of both employed and self-employed workforces using the Office for National Statistics' Labour Force survey. The self-employed data was assessed partly against a previous survey that we did into the finances of self-employed people, which was run in June 2019. So most of the questions from that survey were repeated here. And we also added some additional questions that were more specific to the COVID context. And as Will mentioned, this year we were also able to compare self-employed people's responses with those of our employed comparison group to really understand where there are differences from the employed population. Alongside this webinar, we're sharing a set of more detailed charts. They're available on our website. And if you'd like to access the questionnaire, the full data tables, or if you've got any other questions on the research, please do get in touch with us after today. Just a final note on methodology. Like all surveys, this gives a snapshot in time, and I think it's particularly important this year to be really clear when a survey was conducted. So this survey was conducted in September. Since then, we've had a further national lockdown. We've now got different measures in different parts of the country. The government's extended the self-employed income support scheme. Clearly, the picture's still evolving. So bear in mind when I share the learnings that this was from September. Okay. So what has changed and what has stayed the same from the previous research we did in 2019? I'm first going to share some of the headlines around savings outlook, and then secondly turn to what this context might mean for supporting future saving appropriately. Okay, so firstly, self-employed people say that most self-employed people say that their income has been affected by the pandemic. We see that 61% of self-employed people report that their personal income has decreased since the pandemic, with just under a third of those reporting that it has decreased by more than 25%. We've also got just under a third who say that they've seen no change. And there are also 8% of self-employed people who report that their income has actually increased since the outbreak of COVID-19. So roughly 3 in 10 said their income decreased a lot. 3 in 10 said it decreased moderately or a little. 3 in 10 that it stayed the same, and just under 1 in 10 that it increased. So unsurprisingly, the proportion of self-employed people who said that they are worried about their future has increased, but not massively given the reported changes in income. So it's up from 51% in 2019 to 55% in 2020. And I think it's worth just putting this decline in income for some self-employed people in context. You know, that optimism may be because of hopes that we will come out of the crisis in coming months. Also, potentially because of the financial support that people have received. Around half of the self-employed people who completed this survey said that they've accessed some kind of financial support during COVID-19. And we also know, of course, that some living costs and discretionary spending have reduced under COVID restrictions, which may have mitigated the impact of lost income in some households. Can I have the next slide, please? So next we looked at the impact on well-being, and the picture here is quite nuanced. Self-employed people were a bit more likely than employed people to report a negative impact on their well-being, with half saying this was the case, compared with 41% of employed people. And looking under the surface of that, those who were more likely to feel negatively impacted included those who were working in the arts or tourism sectors, women, those aged under 55, people who have a disability, and people who have had to self-isolate. And then when we looked below that question about general well-being to look at different kinds of well-being impacts, the main differences between self-employed people and employed people was around work and financial stress. So whilst impacts on mental and physical health were similar across both populations, there was quite a difference in the proportion who felt that they'd been impacted by the strain of uncertainty around their business or their work, with 54% of self-employed people reporting that this had been a problem for them, compared with 35% of employed people. But interestingly, despite this increased strain over the uncertainty of work, self-employed people are slightly more likely to say that they're satisfied with their job, so 77% of them compared with 73% of employed people. And they're also quite a bit more likely to say that they feel in control of their work. So 75% of self-employed people feel that I have control over all aspects of my work, compared with 66% of employed people. Can I have the next slide, please? So now looking at saving, we looked at saving in a number of different ways, including here looking at savings frequency, where self-employed people did report some changes from pre-COVID. So on this slide, the orange bar is how frequently people say they're saving currently, and the paler bar is how they said they were saving pre-COVID-19. So we see that fewer self-employed people say that they're saving every month than before COVID, and also the proportion who say that they never saved has roughly doubled. And unsurprisingly, those on lower incomes were less likely to be saving every month, both pre-COVID and currently. And I think this quotation from one of our survey respondents brings to life the affordability constraints that some people are facing. And also something else we're seeing from a number of sources, which is that whilst people may not be able to save right now, the idea of saving for the future may be more salient after the uncertainties and challenges of this year. So this person says, as soon as I am back to regular income, I will be saving for the future. They want to save when they can. I think it's also important to note, looking at this chart, the proportion of self-employed people who say that they save but not every month. So around half of self-employed people say that they save either most months, some months but not others, or rarely. And we think this supports the need for a more flexible solution for self-employed saving than a sort of regular monthly auto-save. And perhaps also particularly thinking about relevant moments for saving. So for those people who say that they save rarely, you know, is that a once a year? Is that around the end of the tax year, or is it a particular seasonal better moment in certain sectors? Can I have the next slide, please? So we also looked at whether people are saving more, less, or about the same as before, thinking about different types of savings. So on the left, emergency savings for unexpected expenses, in the middle, savings for short to mid-term goals, and on the right-hand side, saving for retirement. And I think we can really see here, as is true across the board, that the impact of COVID has been unevenly distributed. And whilst there are people who are saving less, there are also people who are saving more than before, or who have actually started saving. So around half of self-employed people say that the amount that they're saving for any reason has not changed. That's the middle blue group in these bar charts. Around 1 in 5 say they've reduced spending, the dark red group. And some self-employed people have started saving or increased the amount that they're saving, the green group at the top of the bars. 15% say this for emergency saving and 9% say this for pension saving. And I think we can see here that those that are saving are generally prioritising emergency saving a bit, but the difference isn't huge, and retirement saving is not far behind emergency saving and short to mid-term saving. And this also held true when we asked people to look ahead to the near future as well. So 41% thinks that they'll be able to save for emergencies over the next year, compared with 34% for retirement. Can I have the next slide, please? We also asked people how much they could afford to save at the moment, and this was whether they were actually saving or not. So just under 1 in 3 say they can't afford to save. And although it's challenging, we believe we need to think about appropriate solutions for this group, for whom having savings to protect against shocks is likely to have become more salient, but for whom it might feel out of reach at the moment. So we need to remember that 1 in 3. There's also 2/3 who say that they can afford to save at least a bit each month, with 2 in 10 saying they could afford to save more than £200 a month. And obviously that picture varies by income, but I think it's worth saying that there are still 57% of those earning under £20,000 a year who feel they could save at least a bit each month. And on the right-hand side of this chart, we can see that at least 4 in 10 of each income band say that they could afford to save. So firstly, £25 each month for those earning under £20,000 a year, £50 a month for those earning £20,000 to £30,000 a year, and £100 each month for those earning £30,000 to £40,000 a year. And interestingly, that sort of very roughly equates to the minimum employee contributions and qualifying earnings under auto enrolment for someone at the midpoint of each of those earning bands. Next slide, please. So we also looked at attitudes around saving, and I think it's sort of really important that the belief in the importance of retirement saving doesn't seem to have been affected by the pandemic. So 3/4 of self-employed people say that it's important to put aside money for retirement, and that's very consistent with 2019. But we do see that confidence has taken a bit of a hit. So 59% are not confident or unsure that they will be able to provide financially for their retirement, which is a bit of an increase from 2019. And when asked specifically, 37% say that their confidence has decreased since COVID-19, and that is higher than amongst employed people. Okay, so what do the past 8 months mean for supporting future saving among self-employed people? So as Will said, we had planned to trial solutions designed to fit with self-employed people's needs and context this year, and that was put on hold as the pandemic hit. And we've conducted this research as well as actively watching the research releases of other organisations to better understand whether measures to encourage self-employed people to save for retirement are still appropriate, and for who, how they could best be targeted. So is it appropriate to pick that activity back up as we look ahead to 2021? And what about the implications for providers and for other organisations who are looking to support self-employed people to build financial security, both in the short term and looking ahead for their later lives? Can I have the next slide, please? So this chart looks at whether or not self-employed people feel able to save and whether they think they'll be able to save in the next 6 to 12 months. And the biggest group here is the green bubble. Is those who can save now and think that they will continue to be able to save in the coming months, and that's 6 in 10 of self-employed people. And within that group, we see 8 out of 10 think it's important to save for retirement, but just under half are not confident about providing for themselves and therefore may need support. And then there's a further 12% who say that they're not able to save now, but will be able to in the near future. So together, that's 7 in 10 self-employed people who say that they're either able to save now or will be very soon. There's another 12% who we've labelled at risk here, who say that they can't save now and don't think they'll be able to save in the future. And there's also a similar sized group of people who said they were not sure, so they're not shown on this chart in case anyone's trying to add that up to 100. Just over 5 in 10 self-employed people say that they're open to guidance about how best to save for retirement, and this is pretty consistent with 2019. So we believe that whilst we need to consider the needs of the at-risk group, we also think that we should not stop working on the question of how to support saving for the over 7 in 10 self-employed people who say that they're able to save either now or in the near future, and for that additional not sure group. Can I have the next slide, please? So we also wanted to understand whether there was likely to be any change in responses to the retirement saving messages we explored in our previous trials. And here we can see a number of different messages and responses to those by self-employed and employed people. So we asked people which message they'd be most likely to open and read. As we found in our previous trials, messages that emphasise flexibility, that emphasise the tax benefits of saving into a pension, and that show saving broken down into small amounts each day were most appealing to self-employed people. And that flexibility message particularly stands out. Self-employed people also reported that they were less likely to engage with the loss-framed messages, the ones that are sort of on the right-hand side of this chart. And we did previously see people saying this to us in research, and then in the messaging trials that we did, open rates were similar across all the messages, including the loss frame messages. But given the wellbeing impacts of the pandemic that we've just looked at, we think that loss frame messages may not be appropriate in the current context, that actually messages around ease and flexibility and control are more likely to connect. Can I have the next slide, please? The importance of that flexibility also carries through to the way that self-employed people want and need to save, the sort of mechanisms for saving. So we see that many self-employed people still like the idea of flexible auto-saving mechanisms. 57% of self-employed people said that they like that idea, which is very similar to what we saw in 2019. In this survey, we broke that down a bit and we explored different mechanisms. So automatically saving leftover money in good months, roundups, saving a regular fixed amount, a manual annual saving, and a saving of percentage of invoices charged. And across those, we see sort of pretty similar responses in terms of what would most appeal. And we're really keen to explore this further through real life trials. And I'll say a bit more about that in a moment. I think it's also worth saying that the automatic savings options tended to be most popular with women, with younger people, those with preschool or school-age kids, and those who have reduced income or who have reduced their hours recently. So they seem to be reaching some of those groups who are more at risk or less likely to be saving. Can I have the next slide, please? So we also wanted to look at whether one outcome of the pandemic impacts would be that self-employed people would go off pension saving, or that they would turn to purely liquid saving, that emergency saving would be the only thing that people would kind of be able to think about that. And we didn't find that to be the case. But we did see that combining a liquid account and a pension has a broader appeal than a pension-only option. So only 9% of self-employed people who said they were interested in automatic saving said they wouldn't want to save into a pension, at least in part. 23% said they would want to use a pension-only option. And 25% picked a setup similar to the sidecar savings concept we're currently trialling with employed people, where savings would be made first into a liquid account and then into a pension account. And 32%, so the biggest group, would want to split the money between a savings account and a pension each time they saved. Can I have the next slide, please? So in an attempt to sum up, we've seen that some self-employed people's stated ability to save has decreased as a result of COVID-19, and affordability is clearly a significant barrier for some self-employed people. But for a greater proportion, actually, their ability to save has stayed the same, or perhaps even in some cases increased. We've also seen that the underlying sentiment towards long-term saving hasn't been impacted. So most self-employed people still feel retirement saving is important, and many of them are open to help and guidance in saving for their future. Thirdly, we see that having some flexibility in savings mechanisms and some accessibility in the savings remains important, and might broaden the appeal of retirement saving to a wider group of self-employed people. So as a result of that, we believe that trialling solutions to better meet these needs and preferences as soon as possible will help us to think about supporting those who are already ready to save, and also mean that at times in the future when those that at-risk group, the more vulnerable group, are in a position to save, that there would be mechanisms there to support them. And actually now there is an opportunity to pilot and test solutions that could help us better understand how to support self-employed people to save at a time when saving for the future is particularly salient, when people are thinking about saving and wanting to save as a result of what's happened this year. clearly not everyone is able to save right now, and we need to think carefully about how we target any trials, and we need to make sure that any messaging is appropriate. But we believe that even, you know, for people who can't save now, thinking about how to trial solutions that would help people to pre-commit to saving in future could be valuable. Can I have the next slide, please? So just looking ahead to those future trials, the research questions that we're looking to explore include these three areas. So the first is whether flexibility, for example, a savings mechanism that is more responsive to income in a given period, does that encourage higher levels of participation and higher persistency in saving than that regular fixed monthly pound amount? So for example, here we could trial rules and presets that allow people to save a percentage of their income or their profit, percentage of invoices paid, a percentage of payments in, all using platforms that self-employed people are already using. The second area is around accessibility of saving, and here we'd like to look at whether some accessibility of saving could encourage higher levels of saving than a traditional pension on its own. And the third area is really thinking about, you know, that difference in where people are at in terms of ability to save right now. And here we'd like to look at whether a mechanism that allows people to sign up now to start saving later encourages higher participation than the standard, which is sign up and save now. So for example, we could trial a pre-commitment to start saving after a period of time, in 6 months' time. We could trial debt to saving pathways that allow people to commit to turning a debt payment into a savings payment. Or we could trial a pre-commitment to save a percentage of found money, for example, from lower expenditure. So in the new year, we'll be looking to form collaborations with providers of products and services that are relevant to self-employed people to trial some of these solutions, some of these ideas within the ecosystem that self-employed people are already using to manage their work and money. Our approach to forming collaborations will also invite suggestions for innovative solutions that could better meet the needs of self-employed people. We're really open to hearing from everybody. If you think there are things that we're missing here that we should be looking at. And all of our trials will be conducted as robust randomised control trials to ensure that we can build a robust evidence base in terms of the relative appeal of different ways of saving. So we're excited to get going with this next stage as soon as the context allows. Meanwhile, thanks so much for listening to our learnings today.
Thank you, Jo. That was great. And I'm now going to hand over to our two panelists just for some initial reactions to what you presented. So starting with you, Amelia, just if you could give us your thoughts on what you've heard from Jo, how it kind of chimes with what else you might be thinking or hearing from the self-employed community yourself.
Well, first of all, thank you for having me on the panel today. The research that you've done is, you know, it's great. It's a real insight, I think, into self-employment savings during the pandemic, attitudes to savings, and what we may see going forward. So I think it's really essential research that Nest has committed to here. So thank you for doing that. Everyone is very much aware of the impact that the pandemic has had on the self-employed and small businesses. And that impact is quite varied in terms of the sector that an individual is working in, or even also the region that their business is based. In terms of pension saving in particular, pension saving its terms coverage is quite sporadic across different types of self-employed individuals. We already know that kind of the lend of the last 2000s self-employment saving has dropped amongst the self-employed. FSB's own research has found that of those who are aged between 34 and 54, that 39% have said that their savings has decreased over during the pandemic, and that for those who are over 55, 56% would like to see kind of greater incentives to save. And I think the crisis has brought into sharp focus the extent to which the self-employed rely on their business for their livelihoods and also for their savings and pensions. And the sharp decline in income during the crisis is likely to have led to long-term effects of self-employment and saving for the long term. And some of those issues that we're yet to see, I think Nest has highlighted them in the research today. The FSB research during the pandemic has shown that 22% of FSB members said that they have taken on more debt, and 15% say they've actually taken on new debt. So I think debt, as we're looking forward to next year, is going to be an essential issue. thinking about the ability for the self-employed to save in the future and their ability to handle that debt. That's a critical issue for the FSB at the moment, and we're looking at some research that we're hoping to publish in the next few weeks looking at self-employment and debt. And so from our previous research also, from looking at the Small Business Index from Q3, we found further evidence that there's an increased heightened economic uncertainty, with businesses across the regions and sectors saying that confidence has diminished in comparison to just before we went into Q3. So I wasn't surprised to hear that Joe was talking about the self-employed feeling in more control of their savings and attitudes towards savings in comparison to those who are employees, despite feeling more strained in light of the coronavirus. I think people who choose to become self-employed want to have greater ownership of their working and personal lives. So having control is a benefit to that, sadly, despite the pandemic. But many of those who are classified as self-employed by the government have been able to claim grants, covering the significant majority of their income, and that has been able to help them during the lockdowns and the various restrictions, and will continue to help them as we look to April 2021. However, thousands of company directors, the newly self-employed and sole traders who are earning over £50,000 sadly haven't been able to access the majority of schemes. We are aware that also universal credit has been very helpful for the self-employed, but also there's a proportion of those who have been rejected. So our research shows that 29% haven't been able to access universal credit, and 10% of those is due to savings restrictions. So if they meet the thresholds that universal credit has set. So there are limitations in terms of what self-employment support is available to those within the self-employment community. And when we asked business owners in the summer about their expectations looking forward into the next year, compared to their pre-COVID revenue, around 29% said they think that there'll be an increase. However, 47% said they think there'll actually be a decrease in terms of their revenue in comparison to previous years. And unsurprisingly, those businesses in the hospitality sector are feeling the least optimistic. Late payments is a big issue for the self-employed, and that puts a lot of pressure onto the self-employed in terms of their well-being as well. And 62% of small businesses have been subject to late or frozen payments in the wake of coronavirus. So it's very difficult if you are waiting on money to come into you to be able to put money away to save. That's a critical factor. And I think that speaks again to what Nest has found in terms of looking at possible solutions for the self-employed, and that there needs to be that flexibility there, because if you're self-employed, you don't have an income coming into your bank account every month if you're as an employee. And so having the more various types of flexibility in terms of solutions will be extremely beneficial for the self-employed. As I said, with the late payments, from our members, they're telling us they're having to wait over 120 days to receive payments coming in. So which obviously will have an impact in terms of their well-being and their financial well-being. So I think going forward into the next year, we are very much committed to kind of finding solutions and working with organisations such as Nest, and looking at the research that you found and that you're looking to do in the future in terms of trialling for the self-employed and pension saving. It's very much an issue that's at the core of our membership, in terms of members are very still, despite the impact of the pandemic, are committed to putting pressure on government to come forward with greater solutions for the self-employed. And I think that that's key. I know just in the last year, I've been at events where members have come to me and have asked, what's FSB doing? What are the possible options for me if I'm thinking about retirement in the future? So it's great to hear from the research that you found that there is still a lot of appetite to find solutions. And I think a lot of that appetite comes from certain characteristics within the self-employed. So if you're younger, you're more interested about different solutions than, say, if you're slightly older and coming up to retirement age. So I think the research that Nest has done has been fantastic. I'm looking forward to hearing and seeing more about the research that you've got to do in the future as well. Thank you.
Thank you, Amelia. And then before we throw it open to some questions, Jamie, could you just share your thoughts from a kind of industry perspective on what you've heard so far?
Yeah, absolutely. First of all, just a note of housekeeping from me. I live opposite something of a building site, and this bloke has just turned up with what looks like a pneumatic drill, poised to start using it when I speak. So don't be surprised with a bit of background noise, but I'll be fairly brief. Great piece of research. Thanks for running through it, Joe. It's really interesting and really insightful, particularly that it's so recent as well. We've got a lot of stuff we can look back on over the years, but having something that would run in September, given the seismic events of this year, I think is really useful. It gives us a very up-to-date picture of what's going on. To a large extent, it reflects, I think, the diversity that we saw during the initial 2017 review when we looked at the self-employed population, and we see, everything as you would expect from the highly paid, quite sophisticated consultancy type self-employed person who, he or she tends to be doing all right, has an advisor and probably use a SIP for their retirement savings, through to those who are, struggling to get by, and indeed, those who are delivering pizza or whatever it may be, and everybody in between. And that's a really diverse population compared to the regularity of earnings that employees working for companies have. The diversity of how earnings are derived for the self-employed, is very stark, and that comes through, I think, in the research. You have a range of responses from those who are very upbeat about what they need to do, through to perhaps the majority who still see quite a lot of headwinds, either immediately or even longer term. I mean, what the pandemic has really, I suppose, exacerbated is the move away from some things that people do to different things that people will do in future, and different types of demands that customers will place upon that very fast. And we all know that some trades will flourish, have flourished, and will continue to do so, and some will do less well on the other side of the pandemic. And indeed, during the pandemic, you've got people who, certainly I know, who are self-employed, who have been enormously busy. Aside from perhaps the first 3 months during the total lockdown, they've been really busy doing whatever they do because people are doing up their houses or whatever, and call upon certain trades to meet that demand. And it's actually quite hard to get some people to do things at the moment because they are in so much demand. Equally, there are people who, tragically have found their job sort of almost gone overnight, and in some cases with very little prospect of that work returning. And particularly, I think Amelia touched on the people working in the arts as a good example. There are people who just have had no work or very limited work, and may not see that that's going to resume quickly enough for them to earn money, and they have to retrain. So it's almost like, I suppose what I'm saying in summary is that the diversity of the self-employed population has been compounded, if you like, or extended, exacerbated by the pandemic, and we have to see what comes of that. And it plays to this point around, we can't just look at the success of automatic enrolment for the employed population and say, let's do that for the self-employed. I think we're all kind of past that realization now, that it's going to take something more flexible and something more tailored to the types of diverse populations within the self-employed to find a solution that really works. So that's just some thoughts, but great piece of research, and I think it gives us a real platform to move forward.
Great, thank you, Jamie. So I had a few questions in. I was just thinking about kind of where to go first. I wonder, just picking up on the point you were making there, Jamie. One of the questions we've had is around whether we saw much difference in our research, or indeed whether Amelia or Jamie, in any other research you've seen, any particular differences between subcategories of the self-employed, be it age or geography or industry. So I wonder, just Joe, maybe starting with you, whether there's any particular area that you wanted to pull out where that sort of makes the diversity point that Jamie's making there, and then Amelia and Jamie to follow.
Yeah, so I think you know, we know that the impacts of the pandemic have been very different by sector. We've seen that in lots of places, and we do see it in this research. We don't have a hospitality group, we have a tourism group, and we have a food and drink group. So our labelling is slightly different. But I think, as others have seen, we saw that the arts and tourism sectors were less confident that their business, that their self-employed work would survive the pandemic. They were more likely to feel negatively impacted by COVID as an individual. And about a quarter of those working in the tourism category fall into a group that said that they can't save now and won't be able to in the next year, that at-risk group that I talked about. There were also some differences, and we saw this in 2019 as well, in terms of confidence about retirement saving and openness guidance. So almost half of those working in the administration and arts sectors fell into the group that we've called not confident and open. So the group actually, you know, who potentially are most likely to be helped by different kinds of support because they are open to that, and they're also not confident in the plans they have. So we did see some differences by sector. You can see those in the full data table. So if anyone's interested in a particular sector or group, do get in touch with us. In terms of other characteristics, the sort of worst affected groups we saw were women, younger people, people with school-age children, particularly, I think, because of the impact of homeschooling and kind of less certain childcare, and also people living with a disability. We didn't see big differences by ethnicity. Those were the biggest ones that we saw.
Great, thank you, Jo. And Amelia, anything to add on that?
Yes, so similar to Jo, I think our findings are also showing that people working in the arts and hospitality feel less optimistic and also somewhat more cautious about the future. I think there's a definite, you can see within the data in terms of sectors, those industries in which they're able to work from home a lot more, and so therefore ability to continue working have fared a lot better than those who are more of a customer facing type businesses. So there's definitely variation in terms of sectors. Hopefully going forward with the rollout of vaccine, that will continue maybe to ease somewhat, and we'll see more benefits for those sectors who are able to reopen again. But I think that sectors is a key issue, also in terms of age as well. So the younger you are, the more concerned maybe you're actually thinking about your pensions, because you're relying a lot more on your savings than you intended to do at the beginning of the year. So we've seen interest facts around that, and I think it would be really good to look at those characteristics going forward as well.
Great, thanks, Amelia. And Jamie, just to come back on that point, anything more to add?
I suppose just it's interesting. Your natural assumption is that during such times when income is disrupted for so many people, that they will most obviously have looked at what other funds do they have available, what rainy day funds or emergency funds or the money in the bank do they have to cover the problems that they immediately face. And I think that's, you know, it's fairly true and it's fairly obvious. But equally, I think it's probably, and this is, you know, I'm not suggesting this is evidence through the research, but I think it's probably the case that a lot of people have had to think harder about, you know, what it feels to have money squeezed like that and what that would mean in retirement too. I think people have started to stop and reflect not just on what it means right now, but even when things return to normal, do they face a similar challenge over the long term in retirement? I think people are just thinking about their finances an awful lot more because of this.
Great, thanks, Jamie. So I've had a question here about kind of whether there's enough being done to make the self-employed aware of kind of the options that are already there for them in saving for retirement. I mean, specifically, the question points out that recently when Martin Lewis was asked by a self-employed person where they should save for retirement, he responded by suggesting a stakeholder pension, which the person asking the question quite rightly points out is maybe, you know, not necessarily the right answer anymore. Clearly, I mean, NEST is one of the options, and could and perhaps should be doing more to make the self-employed aware that that's an option there. But I guess just reaching out, maybe Jamie first. You know, do you think there's something in this? Is some of this just that the industry isn't talking to the self-employed enough about the options they already have?
Well, possibly. You don't. I mean, you don't have sort of door-to-door salesman, or the man from the Pru, as many people will remember, going around and tapping on your door and saying you should have this life insurance policy or this product anymore, and you know that's not something that will return. So there isn't a sort of proactive kind of selling regime in place. I'm not suggesting that there should be. I mean, where the success has come through auto enrolment is sort of bringing everybody in on a sort of national conscience, if you like, that we should all be saving for retirement. It's the right thing to do, and we can do it all through the workplace. I mean, we have got. I mean, you mentioned stakeholder, and stakeholder might be considered an outdated product. There's nothing fundamentally wrong with it. There's nothing fundamentally wrong with it when it was launched back in, I think, 2000 or 2001. The problem was that there was no policy around it to get people into them, as auto enrolment has subsequently shown. And it's true. I mean, we've got the products that people really need for all of their financial needs, I would suggest, at the moment, maybe with some tweaks around flexibility. But it's not like they're sort of thrust in front of people as solutions, or sort of sold to them as things they should be doing. And that's the tricky bit. The auto enrolment we managed to solve through employers and a really good piece of policy making. I think we need to find something similar to bring together the product solutions that are there, again maybe with some tweaks, to the people who need them in a way that everybody agrees is workable and sensible. And that's where I think, you know, final point on this is I think that's where this research and the work that's being done and the work that will be done around trialling is really helping us. So again, I don't think we just apply auto enrolment as was, we can't, but there probably is a solution that will marry up the needs of people with the kind of products that are available, and we need to do the research and do the trials to find out what that kind of magic nugget is.
Great, thanks, Jamie. And I don't know, Joe, whether you want to come in on, I mean, kind of our earlier research probably suggests that there's a limit to how much just telling people about stuff is going to kind of move the dial on behaviour. Would you want to say any more about that?
Yeah, I think, I mean, as Jamie's highlighted, the earlier research that we did looking at touch points for reaching self-employed people really showed that there's not that one lever as there is with automatic enrolment and the employer, because people have such different circumstances. I think there are a number of moments that have quite a lot of potential. You know, one is when people move from employment to self-employment and they've been covered by auto enrolment in their employed status. You know, are we thinking enough about how people might use that vehicle that they have under auto enrolment to continue saving when they move into self-employment? I think others that we've looked at are things like accountancy software providers, and with making tax digital, and you know, the interaction that all self-employed people have with the tax system and with self-assessment or kind of other processes. You know, that does seem to have lots of potential, but then we're also looking at other touch points that increasing numbers of people are using, and I think, you know, are used by some of the groups that are perhaps less well served by other areas. So things like platforms to sell work, platforms to find work, payment platforms, but all of that is quite a patchwork of different potential solutions. And I think if we can find a way to sort of ladder any of those up, or kind of find what the right solution in terms of flexibility and control in saving is, and then apply that across multiple touch points, we're going to need that to get to scale.
Great, thanks, Joe. I mean, I'm going to move on to a slightly different question for you, if that's the case. So we want to make sure we get a chance to touch on as many of the questions that we've had as possible. There's a really interesting question here, pointing out that with auto enrolment and the employer plays an important role as a sort of trusted source of information and guidance to employees. You know, these are a lot of cases, whereas perhaps for the self-employed, who may be being kind of sold to more directly by product providers and things, there's maybe not that same kind of source of trusted guidance. And the question is, where do we think that self-employed can go to for that kind of sense of trusted guidance? Is that something you've got thoughts on?
Yeah, I mean, I think it's right. When you set up a business, there's so many factors that you're dealing with or having to deal with. Sadly, sometimes pensions is probably at the bottom of your list. Joe's quite right in that we need to think more about those people who are coming from auto enrolment, so they've been saving with their employer and then transitioning into self-employment, and what can be done there in terms of the communication around pensions, because that's the most that they've engaged with pensions in their lifetime. And when you become self-employed, the priority of pension saving, with all the other aspects of setting up a business, is fairly low down that list. And so, if you have various people who are coming forward and giving you series of options, you may be somewhat more pessimistic if they're selling you the right thing. So I think having a trusted advice, whether that's kind of the government is saying X and Y and Z, what may work well for the self-employed. There are different options in terms of saving depending on your needs. I think will actually work quite well in giving the self-employed more confidence to save and confidence to save in areas that they think will have a good return for them, and actually very confident in that their savings are in a trusted place. So I think that's a positive step to think about.
Great, thanks, Amelia. So we've probably got time for a couple more questions. We've had a question about flexibility, and Joe, you talked about this in our research, and Amelia, you've talked about it a lot as well in terms of some of what you've seen. I just wonder whether to all three of you, really, maybe perhaps starting with Joe, based on our research, kind of whether we can say any more about what we think the self-employed mean by flexibility. What is the issue there? And Joe, you've already talked a bit about some of the solutions we've thought about, but just in terms of the underlying drivers of that desire for flexibility, what do we think it is that's going on there?
So I think particularly in the earlier qualitative research that we did, there are a group of self-employed people who have variable income, and that might be always variable, or it might be seasonally variable in a sort of reasonably predictable way. But actually, even for those who didn't have particularly variable income, the feeling of uncertain income. So even if actually I've got, pretty regular group of clients and they pay me pretty well, there's always that fear of the invoice that won't be paid, of the kind of late payments that Amelia was talking about. So whether people actually have variable income, or whether they have a fear of kind of future variability or uncertainty, that creates a barrier to signing up to a kind of regular monthly pound amount for some self-employed people, because of the fear that the money won't be there, or I'll put it away and I'll need it. So I think that there's sort of two aspects of that flexibility. One is, how can you save regularly and automatically, but in a way that is responsive to your income, and in a way that makes you feel in control of the amount that you're saving, in a way that's flexible to how much money you have each month, ideally that's smart to kind of how your profit is going, what costs you've got coming up. Ideally that would be a better way, people have told us to save. And then I think the other aspect of flexibility is thinking about actually the access to the money. And there I think the picture is perhaps a bit more mixed actually post-COVID, in that about half of we asked whether people thought that their retirement savings should be locked up at times like a pandemic, and actually about half of people said yes, it should still be locked up. So people do understand the need to keep retirement saving for retirement and not access it, but they also have a need, given the possibility of income shocks, which, in any year is a possibility, but, this year is kind of particularly top of mind for people. Having some of that money accessible seems to be a good balance. And obviously we've talked about, how do you build that? Do you build some accessible savings first and then save into something that's more locked up, or do you build those two things alongside each other? Which of those is likely to feel most attractive to self-employed people and make self-employed people feel able to sign up to that kind of saving? So I think it's a good question, because there are lots of different aspects to flexibility, and some unanswered questions about, for different kinds of self-employed people, which version of this is going to be most attractive and most helpful in helping people save persistently.
Great, thanks, Joe. And Amelia, I mean, you also talked about debt and there's obviously other kind of financial challenges as well as variable income facing the self-employed. How does that factor into the question of flexibility in your view?
I mean, I think it's essential to it. If you're looking at saving right now, if you're self-employed and you have taken on a lot of debt over COVID, you're definitely aware that you want to save, because you probably tapped in and relied on your savings. But the ability to forecast and think about saving in the future is quite difficult. So having a range of options where there is flexibility, whether in terms of the amount that you can save or the how often you can save, I think is central to that. And I think the self-employment over the last 10 to 15 years has been changing and evolving, different types of people going into self-employment. And I think we will see following the coronavirus pandemic, that will also have an impact on who are the self-employed. And then we'll also have to think about flexibility options as well in relation to that. So I think it's always important to kind of think about flexibility as something that's constantly evolving, and those options that we're thinking about will have to change as well.
Great, thanks, Amelia. Final question then. I'll start with you, Jamie, and then maybe hand back to you, Amelia, for the final word. Obviously, all the work that we've been doing in terms of the research builds from within the current regulatory framework. So we're sort of testing what can be done to get the self-employed saving within the current rule base. I just wonder, sort of Jamie first, you know, whether there's anything else you think should be on the table here as part of the toolkit to try and address this issue.
I think we probably have the necessary sort of flexibility within the product rules, and that's not where I would go first. I mean, there's maybe some, again, there's maybe some tweaks you'd make here and there, but to me the biggest problem is not the products and it's not the lack of desire to save, it's the kind of connecting the two that's hard. And the more obvious sort of solution you would seek to connect them would be advice or guidance. For example, you know, that could be a way that we connect people now. To say to everybody, go and get advice, and therefore spend hundreds, if not, you know, thousands of pounds on that advice, will be disproportionately unnecessary for some people. It will suit some people, but very, very few at the lower end of the earnings bracket. But equally, if you know, if we only focus on guidance, and that guidance is really limited to purely giving information, then it might not be enough, you know, to actually get people to make a move. And that's where I think we need to look is, you know, for example, are there a bunch of kind of primary financial needs that people have? I think we've accepted one on retirement for employed people. Auto enrollment was the big solution to that. I know I keep alluding to. But are there others? I mean, employed or self-employed, do you have a primary financial need to have some money for an emergency when you have no income, or when the car breaks down or the fridge breaks down or whatever it may be? And equally, most people have some kind of primary financial need for protection. So should we be looking, you know, more broadly than just employed people and auto enrollment, and say, are there a few primary financial needs that we should seek to solve on a much wider basis? And perhaps guidance could be extended to cover those without getting into sophisticated advice.
Great, thanks, Jamie. And Amelia, just any thoughts on that, kind of any other changes you think we should be looking at here to try and address undersaving among the self-employed?
I think the research that Nest is doing is really vital in terms of thinking about what steps we need to take in terms of solutions. You know, Joe mentioned earlier about thinking about when people are making payments in terms of their taxation, so whether we need to intervene there. And I think Jamie is right in that there is a lot of focus obviously on employees and auto enrollment, and there are still lessons that we can learn from those people who are saving into an AE scheme, and how can we look at some of those lessons, maybe adopt or think about them in terms of the self-employed community, as I mentioned, which is constantly evolving, and I think will evolve in light of COVID. So I don't think there's a one answer here. I think it's a range of a series of answers, as we talked about, with the flexibility and options that we are still kind of coming to deal with, and finding out the various steps that we need to take. And hopefully in the next few months, and if the next year, we can make that progress.
Fantastic, thank you, Amelia. Great note to end on. So we're going to stop there. I'm sorry to those whose questions we haven't managed to get to. We had some really great questions, and we will look to engage with people outside of this session on some of the specific points of detail in particular that were asked about the research. Thank you to all of our panelists today, Jamie, Amelia and Joe, for joining us and for some really insightful comments. Thank you to everyone who's joined us for today's webinar and for the previous run in the series of webinars we've been running over the last few weeks. And thank you also to DWP again for supporting this research, which we think is really, really critical and addresses a really critical issue. And on that note, I'm going to say happy holidays to everybody, and thank you very much for joining us. Thanks a lot.